Are you a real estate investor looking to start your first flip? Are you a passive investor looking for the next opportunity? Regardless of your situation, our mission is to help everyone work towards their unique version of financial freedom. Hello, everyone, and welcome back to the Conduit Capital Podcast. I am your host, Adam Barrow, and it has been a while since I've recorded a podcast, so I'm excited to be back in the speaker's chair. And today I'm going to be talking to you about creative loan structures in real estate private lending. So, as you may know, Conduit Capital does a lot of private lending in the real estate space, and there are two main arenas that we operate in the real estate space. There are many different deal structures in private lending and specifically in real estate. But I'm only going to talk to you about the two that we do most frequently because I don't have much knowledge about the other areas, and I want to make sure I'm at least telling you the way we do things because other people might do things a little bit differently. And the two types of loan structures I'm going to talk to you today are bridge loans and interest-only loans. So bridge loans are usually short-term financing for things like acquisitions or refinances, and they're quick cash out strategies. And then the other types of loans that we do are interest-only loans. So these are loans with lower payments that help investors preserve their cash flow. And there are pros and cons to each one of these. But before I get into the pros and cons, I want to talk about the importance of matching the loan structure to the borrower needs as well as the type of deal that you're doing. So first and foremost, I talk about this quite a bit. Before doing deals, you need to evaluate what your risk tolerance is as an investor, and then what sort of investments you prefer to do. So there are some investors that I talk to that love being active investors. This means that they love having their hands involved in their investments and they really prefer those day-to-day updates or even month-to-month updates. And then I also work with investors who tend to be on the passive side of things. This means that they want their money out working for them and they really look forward to that monthly mailbox money where maybe they're involved in an active business, so they don't have the time to be a hands-on manager of their investment. And oftentimes, investors come to Conduit Capital looking for us to fulfill that role where we are overseeing the investment for them and we're acting as a steward for their investment. It really doesn't matter which preference you have as an investor. It's really up to you, and there are strong cases to be made for both sides. But I've seen that as investors kind of dig into the investment world more, they are able to kind of find out what appeals to them and like I mentioned previously, what appeals to one investor may not appeal to another. And it's also completely fine to change your outlook on investing as you learn more things and as you have more experience in the investing world. Now, I want to also talk about the security. So I talked about the risk that investors take on, but there's also a certain security involved in your investment when evaluating deals. Um, so it's important to ask yourself the question, how is my investment, how is my position in this deal being secured? Is it like a real estate loan where in our case those loans are tied to a physical asset and we're in first position in those cases, or is there some other security, is there some other collateral offered by the borrower that makes you feel secure in the investment? That's the first part, the first question that you need to ask yourself. The second part of that question is, are the terms of your note or the terms of the deal enforceable? You could ask for the borrower upon default to give you the moon, give you the moon and the stars, everything. But those terms may not be enforceable. And a lot of that depends on the state that you're doing business in, as well as the type of deal that you're doing. So a big thing that we look into when we lend in other states is usury laws. So the max interest rate that you can charge a borrower on a type of deal. Um, I've seen some states where they cap it relatively low. Like I believe some states on the East Coast, they have kind of a low maximum usury rate compared to some states that we operate in the Midwest. So little things like that are important to keep in mind before pursuing a deal with a borrower, because if you want to charge a 17% interest rate, and your state doesn't allow it, in the event of default, or if things go sideways or upside down, you might not be able to get what you initially agreed upon with the borrower because of those usury rates. So make sure that the terms of your deal are enforceable. Um, a big thing that we do in Conduit Capital, regarding the security of our investment, as I mentioned a little bit previously, is that we invest in real assets, assets that exist. Houses, property is inherently valuable. So that gives us and our investors a little bit of security. An important point to note is that how our fund is structured, the fund has first position liens on all the properties that we lend on. Our investors don't. So our agreement is through our PPM. And if you have any questions about how our fund works in that regard, feel free to reach out. If you actually follow the link to our website or the QR code on the bottom of the screen here, the mirroring always confuses me. You can get more information, and you can even reach out to us, and we'd be happy to email back and forth and answer all of your questions. But the important part of investing in real estate and in those properties that are inherently valuable is that you have to make sure that those properties actually exist. There are many different zoning issues, and the way some cities parcel up properties can be confusing. So making sure that the property that you're investing in, um, one, exists, and two, is included in the parcel that you're putting a lien on, is paramount when approaching an investment like this. So now I want to move on to the pros and cons of the two options that I previously mentioned. So the first is bridge loans, and we don't do these very often, but we have the ability to do these things. With our loans, you could kind of view what we do as bridge loans. I view bridge lending as a a 2 week to maybe a 2 month kind of window where it's very short term. And you're kind of bringing the buyer and the seller to the table, and it's like a double close situation. Some people, they view what we do on the 6 to 8 month range as bridge loans anyway. So if you're talking to someone about bridge lending, make sure you qualify the exact time frame that they're talking about, because there is some variability in the length of those loans. But bridge loans are awesome for the short term. So to be able to do quick deals, to make a great profit on those fees. So that's really how Conduit Capital makes our money. Is on the fees that we charge. We do make money on the spread of interest, but it's mainly on those fees. So that's a highly appealing way to structure deals for us, are those bridge loans. A big con with bridge loans is that issues can be caused if the deals go longer than expected. So, for instance, if you were planning on your money being out for this bridge loan for 2 to 3 weeks and it ends up turning into a 3 month deal, that could put you in a tough situation if you're planning on using those funds for other deals. So you need to be okay with your money being tied up for longer than expected. Obviously, if everything goes right, you'll have your funds back very quickly. But I always tell people, especially the new borrowers that we work with, that if something can go wrong in real estate, it will go wrong in real estate. So it's not about avoiding the pitfalls, it's about preparing yourself for when those pitfalls show up. And the big pitfall with those bridge loans is your money being tied up for longer than expected. And if your money is tied up for longer than expected, um, it puts extra emphasis on the due diligence that you do at the beginning of the deal. So just because a deal is expected to go very quickly doesn't mean that you should slack at all in your due diligence. Oftentimes we get loan applications for deals that maybe have a different time frame or a little different journey from point A to point B than we typically deal with. And we're by no means afraid of pursuing deals like this. But one thing I tell borrowers is regardless of whether it's a deal that we've done a million times or it's a deal that we're pursuing for the first time, our due diligence process stays the same. And we're very strict on the documents that we collect and how we evaluate deals. And there's a timeline that we like to stick to with our deals, and we don't really like to be pushed on that timeline. If a borrower ever comes to me and says, "Hey, I need this closed, ASAP, and I can't provide this due diligence to you, but it's just a slam dunk deal. It's a home run. It's easy money." At Conduit Capital, we kind of put our defenses up because there's no such thing as easy money in this. And since we are investing the money that's entrusted to us by our lenders, I want to make sure that the due diligence that we have is the same across the board on every deal, and it's held to that standard that we always hold our deals to. And so to close things up, just to review what we've talked about so far, there are many different ways and creative ways to structure and finance a deal. And from the outside looking in, especially maybe if you don't have as much experience investing in the real estate world, it can be overwhelming seeing all of these options. And so many people are opinionated on, bridge loans are the best or interest only loans are the best. There is no best. Really, the best option is the one that works for you. So sometimes it takes time to find a deal structure that fits with your temperament as an investor. So it often requires a lot of legwork up front, to ask yourself those really important questions to make sure that you're pursuing an investment that fits your temperament. And also, each deal structure has its pros and cons. So, some deals may offer giant upsides, but be wary because often big upsides also have big downsides. For some people, they're okay dealing with the downsides of the deals that they're working in. Other investors aren't, maybe because they don't know the actual downsides. So, asking questions that highlight, hey, what can go wrong in this deal is very important. And also make sure your position in the deal is secure. So make sure you have those first position liens or make sure that you're investing in an inherently valuable asset. So that way, when things go wrong, you're in the position to make the most of it. And excuse me, just because a deal is unique and creative and offering these big returns, and maybe the borrower needs to move fast, that doesn't mean that your due diligence process changes. So put the effort into making a due diligence process that yields the results that you want and stick to them. Don't be forced out just because something's happening really fast and you don't want to have that fear of missing out. Well, thank you for joining me on episode 16 of the Conduit Capital podcast. Today we talked about creative loan structures in real estate private lending. Be sure to check out our website and follow us on all of our social media to stay in touch. And if you have any questions, always feel free to reach out. We're always happy to answer questions. So I will talk to you next time. Until then, remember to be a conduit, not a bucket. Thank you for tuning in to our podcast today. If you enjoyed this episode and would like to stay up to date with all of our latest content, please follow us on social media. You can find us on YouTube, TikTok, Facebook, and Instagram at Conduit Capital Podcast. We love hearing from our listeners, so feel free to send us a message, leave a comment, or share your thoughts with us.